This video will probably piss some people off.
You're not an intellectual. You're a fake and a fraud.
So back when I started trading Forex, I was looking at different mentors, different traders, different strategies, and it was really hard to find who was really profitable and who was just a marketer. On Instagram, on YouTube, there are a lot of Forex traders who are just influencers trying to sell you a course. They really don't know anything about trading, but they're flashing the Forex lifestyle. They're driving all of the cool cars. They're making huge amounts of money. And it's all just to get you to buy their course. So as I said, when I was starting, it was really hard to find a real trader, a real profitable mentor who will teach you how to trade with realistic expectations and who will tell it like it is. That is why I'm making this video. I want to give people a realistic view into what they can expect from their trading journey, and I want to help them spot fake traders. I want to help them to filter out those influencers. Because the best way to learn Forex is to actually pick a mentor, pick a Forex trader you like, and then try to copy exactly what they have done to become a consistently profitable trader. So today I will give you 4 red flags that you can look at to see if someone is a real trader or if someone is just a Forex influencer or trying to sell you a course. So from my freer experience of actually trading the Forex market and looking at Instagram, looking at YouTube, looking at all of the traders, how they approach the markets, their strategies, what they promise to teach you, and their courses, I have developed these 4 red flags, which are huge telltale signs if someone is just out to get your money. So the first red flag, it is changing strategies. So now with the rise of SMC, with the smart money concepts, I see a lot of traders switching to SMC. And usually when someone is switching strategies and abandoning their old strategy, they're stuck in the cycle of doom. So what is the cycle of doom? Well, that is when you're trading a strategy, you have a winning period, and then the quiet period comes, you start getting some losses, you start to get into a period with no trades, and then you just completely abandon your strategy and start a completely new one. Some traders are stuck in that cycle of doom for their whole trading career, and they just don't know how to climb out of it, and they never become consistently profitable. So if a trader or a mentor that you're learning from or you're looking at has completely switched strategies, well, that is a good indication that they're not consistently profitable and that they're still stuck in that cycle of doom. Why would you learn from someone who is not consistently profitable? That just doesn't make sense. I would say to master one strategy, you need to trade at least 3 to 5 years, maybe even more. And then once you have fully mastered it, you know exactly how to trade it and know exactly the edges that you're trading, you can then maybe experiment with another strategy. But learning a strategy for 1 year and then just completely abandoning it to start something else, well, then you're just stuck in a cycle of doom, and unfortunately you will never become consistently profitable unless you break that cycle and you actually start focusing on one strategy. Every strategy will have its good periods and every strategy will have its bad periods. So in the Forex market, it is completely normal to have 1 to maybe even 3 months of a quiet period of having almost no trades or being in a drawdown, having some losing trades. That's just the reality of trading Forex. You're going to have those good periods, you're going to have those good months, and then you will have those quiet periods, you will have the bad months of almost no trades or maybe even some losses. So you have to be prepared for it. Every strategy will have its good periods and every strategy will have its bad periods. If you just abandon a strategy once the bad periods come, guess what? Your new strategy will have the exact same problem. So if you see a trader completely switching their strategies, that's a good indication that they're still stuck in the cycle of doom. Then we come to the second red flag, which is a high win rate and a huge risk to reward, especially with the SMC. I saw on Instagram like 1 to 50, 1 to 100, maybe 1 to 200 risk to reward trades. I mean, that is just not possible. I mean, it's not sustainable. You may get that sort of a trade once in 5 years or once in 10 years, but guess what? You're going to take so many losses that in the end you will be in the negative. So relying on making those 1 to 100, 1 to 200 trades with a 2 or 3 pip stop, it's just completely unrealistic, and I would advise everyone to just stay away from that sort of a strategy. If someone is promising you a huge risk to reward and a high win rate, there's something really fishy going on, because in Forex usually most of the strategies have a low win rate, somewhere around 40 to 50%, so you're actually going to be losing more trades than winning. My strategy is around 40% win rate according to my results, and that's just normal. That's just how the Forex market works. My risk to reward is high. It's 1 to 5, maybe even 1 to 10 on some trades, but it's not 1 to 50 or 1 to 100. That is just complete nonsense. So what you can expect in the Forex market is a lower win rate, let's say around 50%, and the risk to reward to be around 1 to 5, maybe 1 to 10. If you see a trader trading that sort of a strategy, then that is a good indication that that trader knows exactly what he is doing. Then we come to the third red flag, which is unrealistic results. Now by this, I mean traders and mentors promising you 30% months each month for the whole year. That's just completely unrealistic, especially in the Forex market. So making 30% or even 20 or even 15% every month, each month, consistently, I believe it's not possible. You will have some losing months, you will have some break-even months, but in the end it will balance out. So what kind of results can you expect from trading the Forex market? Well, the top traders with 10 to 15 years of trading experience are making around 200 to 300% per year. That is kind of the ceiling of what you can make. And if you see someone promising 500 to 600% uncompounded, I would be very skeptical. And those top traders actually sometimes have losing months, sometimes they have break-even months, they do have 30% months, maybe they do even have 50% months. In the end, things balance out. They have good periods, they have bad periods, they have winning periods, and they have losing periods. It's just a part of the game. So if you see someone promising 20% month each month and maybe doing 600 to 700 uncompounded percent per year, I would just stay away. So what you can expect as an average Forex trader with, let's say, 2 to 3 years of experience, 60 to 80% per year, that's definitely doable. It can definitely be done, and it's a good percentage. 60% of $1 million is $600,000, which is a lot of money. So that is what you can expect. I would say 60 to 80%. If you have more experience, if you have better skills, if you maybe have a really good market edge, then you can make that 200 to 300%. But I would say that is reserved for those really top tier traders. So the fourth and the final red flag is not having consistent results published. So what do I mean by consistent results? Well, I mean results going back 1 year, 2 years, maybe even 3 years back, and a trader posting their trades every day, maybe every week. And when you see that consistency going back a few years, then you can really trust that trader, trust that mentor. For example, Josh from Gorilla Trading, he has been doing trade recaps 3 times per week for the last, I believe, 2 or 3 years. I have watched every single one of them, and you can really see, I mean, that would be impossible to fake. He knows exactly why he's in each trade. He knows exactly why he stayed out of other trades. So those consistent trade recaps and forecasts really solidify that he is a real trader and that he is really taking those trades. Another example would be having a MyFX book like Sam KB from YouTube has. So on MyFX book, if you have results going back a few months, a year, maybe even 2 years, you can really verify if someone is a good trader or just a marketing scammer. I would say with the MyFX book, definitely look at the results. Look if the trader has maybe some break-even months, some negative months. If you see that he is in the green each month and making 20% each month, I would say it's a fake MyFX book. So maybe around 5 to 10% average per month, that's definitely doable. So a MyFX book can be a good verification of a real trader. So that would be it for the red flags, guys. Be careful who you're listening to, do your due diligence, investigate, see who is a real trader. With these red flags, you can definitely spot who is a consistently profitable trader, who is still struggling, who is stuck in the cycle of doom, and who is just a complete scammer. So be careful where you put your money, be careful who you listen to, always do your due diligence, and never rush into anything. If you're interested in one-on-one coaching calls, check out the link in the description. Definitely like this video and subscribe if you took some value. Check out my YouTube channel. I do have some very interesting educational content on prop firms and the trading journey and the trading strategy. I do post daily trade recaps and forecasts, so definitely check it out, and I will see you guys in the next video.